Hello, it's Joe Follico. In today's video, I will be pointing out the top 5 reasons I feel traders lose money, so don't go away. I've been trading the stock and commodity futures markets for over 30 years and have been a commodity futures broker for more than 20 years. In that time, I've seen many traders come and go. In my observations, I've come to identify what I feel are the top 5 reasons why traders lose money when trading the markets. I've compiled this list not to discourage traders, but to offer some insight as to what not to do when trading. Some of these are common sense, but when money and emotions are involved, it's sometimes hard to keep a clear head. You've probably heard some of these, if not all of them, but I urge you to take them to heart when trading. With that being said, here's my list of trading pitfalls and how to avoid them. Number 1. I speak with many traders who see or read a news story that they feel will move a particular market and then want to place a trade based upon that story. Unfortunately, by the time the news story is sent out to the public, it's usually too late to trade on that information. There's an old adage in investing, which you may have heard: buy the rumor, sell the news. What this means is by the time the press gets a hold of a market-moving story, it's already been priced into the markets. So my advice is not to make your trades solely on news stories. Of course, it's good to know the fundamentals of a market you may be considering, but you don't want a news story to be your only reason for placing that trade. Number 2. Unrealistic expectations are another trait I often see from inexperienced traders. Over the years, I've had many clients open an account with $2,000 or $3,000 and expect to turn it into $1 million in a relatively short period of time. Yes, I've seriously heard this many times. They tell me they just read a book on how to make $1 million per year trading, and now they're going to do it all on their own. I let them know that although this is technically possible, it's extremely unlikely to turn $3,000 into $1 million in a year's time. That would be a whopping 33,325% return. My advice is to be realistic with your investment expectations and do the math. I typically ask, what would you consider a good return on your money? I usually hear 20–30%, which I agree would be great. So do the math. A 25% return on a $3,000 investment would be a $750 gain. If you're realistic in your expectations, you'll be much happier in your trading. Number 3. Failing to cut losses is a big reason some traders lose money. Time after time, I hear from clients who say, "I'll just hold on for one more day," only to see their losses grow bigger and bigger. Many traders I see won't use a stop-loss order, or if they do, they keep adjusting it farther away as the market moves closer to their stop price. My advice: know before you even enter a trade what you're willing to risk on this trade. Set your stop-loss order accordingly and have the discipline to never adjust your stop price farther against your position. By following this very simple but important rule, you'll be able to withstand the inevitable losses that come with any type of investing and have the funds available for the next trade opportunity that comes along. Also, I need to remind traders that the use of a stop-loss order may not necessarily limit losses to the intended amount. I hope you're finding this video informative. Please take a moment to click the like and subscribe buttons below if you'd like to see more videos like these. Number 4. Along the same lines as number 3, don't cut your profits short. I see far too many traders take profits way too soon. My golden rule in trading is cut your losses and let your profits run. One way to help with this rule is to use stop-loss orders or options to help protect open positions. Although this seems so simple and logical, many traders let their emotions get the best of them. They may have a profit target on a trade to make $600, but once they are in the trade and have a $200 profit going, they start to panic and just exit the position. My advice: start with a sound trading plan before you even enter a trade. Know your profit and risk objectives and stick to them. As the market moves in your favor, adjust your stop-loss prices accordingly to minimize any losses or to start locking in profits. Number 5. Trading against the trend and trying to pick tops and bottoms is very tricky in trading. I get calls all the time from clients saying they want to go short in a strong upwardly trending market. I'll ask them why they want to go against the trend, and I usually hear, because the market can't go any higher. Well, first of all, yes, it can. Secondly, because it can't go any higher is never a good reason to enter a trade. The old saying, "the trend is your friend," is still true today. It's much easier to go with the flow than to fight the current. Of course, trends will eventually end. Always be aware of your open trading positions. Consider using stop-loss orders or options to protect your open positions. Remember, it's practically impossible to trade without ever having any losses. I hope that the tips I've provided in this video help you minimize your losses and maximize your gains. If you have any questions, please leave them in the comments below or feel free to contact me directly. I'll be happy to help.